All right, quick update here, guys, on ETH and how you can kind of play it and what to look out for when we get these crashes, how you can make money when it crashes, why it crashes, and why we always see the mean reversion when we do find that bottom. I could try to find the bottom. All right, let's get straight into it. So the move that we are talking about is this huge liquidation cascade we did see on ETH. Um, I mean, it basically took out the lows. Did it tap this low? Hard to tell, but I mean, all these lows from back in July, August, September, all of them got torched. So again, a bunch of people forced into the market that wouldn't sell normally. Again, forced sellers, what are they going to be? Price insensitive, right? Forced sellers are price insensitive. They want to get out at the best price, which means they are going to be hitting the order books with large market orders, especially if they're getting liquidated. Um, if you could say, let's say this volume here is a large sell order, someone's getting taken out of the market when they don't want to be. And if they're getting liquidated, depending on the liquidation engine, it's normally, get me out at the best price, which is going to be market. So when people get taken out at the best price and volatility is increasing. What does that happen? So I'm a market maker, and all a market maker does, there's some scary kind of terminology that they run your stops and stuff. That's totally not true. All they do is provide liquidity in the market. Again, they are trying to capture the spread. You can think about this little range right here. They're placing bids and offers and just trying to capture the spread. That's all they're doing. And when volatility is increasing. Again, volatility increases. Normally, market makers pull their bids and their offers. Again, by pulling, let's say this is how the order book looks normally. You have it stacked on both sides. And let's say this is price. This might be a 1 second chart. And then volatility increases, and then you might be like this. And there is really no liquidity to get out for these big market orders, and it really makes a huge impact on price. Again, price insensitive, forced sellers. These are really areas you actually do want to be stepping in and getting involved, because where the most people are getting involved and they have no choice to be, it's normally somewhere you want to be the other side of, if that makes sense. So let's recap real fast. We have market makers stepping out of the way when volatility increases. Again, they are getting out of the way. They're removing their bids and offers, especially the bids here, because they do not want to get ran through when people are getting liquidated. And oh, I just bought 30 ETH, and now price is already down 20%, and I am screwed. So they pulled their bids and offers. They would. Market makers sometimes call this toxic flow. Toxic flow is large market orders coming through and just hitting the bid or the offer continuously and kind of walking it up or walking it down. Um, that is toxic flow, because if you are providing, let's say, liquidity on the downside and it's not bouncing for it, you are just going to end up with a bunch of inventory of ETH at terrible prices and you can't offload. Again, they are capturing the spread between the bid and the offer, nothing else. They're not out to get your stops. That's all they do. So liquidity has evaporated from the books. Then you have these perpetual futures, these futures, and they have a liquidation price. Obviously, when you're down so much from your entry, let's say your liquidation price was here, um, and once it touches this price, they are going to get you out. Normally, by market, depending on the liquidation engine that the exchange has, they say, hey, buddy, they give you a tap on the shoulder. Your account's getting liquidated. We are selling all of your ETH in one clip at market. And what does that do? Again, price insensitive sellers. So what we saw here um, was people getting carried out of the market when they didn't want to be. Again, we had a lot of liquidations. You can see the tape went absolutely crazy. The tape, that just means how many trades are going through. Basically, people are getting taken out when they don't want to be. Um, so you saw that, and you also saw the position that we wick to, which was a great, call this like a swing failure pattern, where we kind of go below these lows and then immediately just reverse. Take all of the liquidity, they call it. Everybody who had stops under here gets taken out, and then we just instantly reverse. It definitely didn't help with the Trump tariff headlines that we had. He's already kind of walked it back, and then the market reversed. But just something to keep in mind. Okay, so we have people getting liquidated on the way down. We have this kind of volume crescendo come in. But why does it get sucked back up to the upside? Well, it's more mechanical than anything. You can think about it. One is people that are being late shorters, they're going to get taken out. Okay. They're going to, again, if you're short, what are you going to be? You're going to be a buyer, and you're going to help the market rebound because you bought at a terrible price. Another thing to keep in mind, the book gets empty. Again, when the book gets empty, it's real easy to move price around. And when people see these liquidations, it's a great place to get involved. You buy, the book is empty, it immediately just evaporates to the upside because there's no liquidity in the market. A lot bigger moves really fast. Let's see. Yeah, I mean, this was 15% in what? So 1 minute, 1, 2, 3, 4, 5 minutes. It went about 15%. So there's no liquidity. No one is providing liquidity, and the market can really move in times like these. So you have the kind of mechanical move to the upside. What you get late sellers getting taken out, plus you get hedges being taken off the board. It's kind of the unwind of a hedge, especially with the news that we got. Plus, you get people chasing. And then plus you get the empty books. All right. So all kind of those put together gives us these bounce, gives us the bounce with the sustain. Again, these are more mechanical bounces. It's not, you know, oh wow, the market is so good that I just want to buy all the ETH that I can. It's not. I wouldn't put it that way. Could be. Trump has been thinking about the tariffs more, just kind of a market dynamic to look out for that happens more often than not. Again, it is not, I'm thinking about how I want to explain it. It's not like a health, I don't want to say healthy, but it's more of a mechanical. Again, more of it's bouncing because of a reason that we saw over here and over here, if that makes sense. Again, like all those reasons I went over, it's not like, oh wow, we built out this great range. It's a multi-month range and we broke out of it. Wow, I'm going to chase price. It's kind of a different situation, more mechanical, um, more matter of fact because of things that happened, if that makes sense. And then we already brought up this chart. You can see it on this one as well. I want to bring it up. The open interest aggregation, again, getting absolutely destroyed. Liquidations picking up. Um, Honestly, ever since Athena, the open interest on ETH has been almost unreadable, I would say. So don't place too much interest in open interest to be corny. If you just look at Sol, the open interest is a lot better for these type of trades. You can see it kind of nuking when we nuke these lows. Anyways, I think as the market matures, open interest is going to become less important. Anyways, you get more funds doing different things with it, but that is what it is. Okay, and then the Bitcoin bounce, again, kind of the same as ETH, kind of those mechanical flows for the bounce. We did bounce at a great spot, kind of low of the range that I have been talking about for a while. Um, And then we're just back at resistance, kind of, where we are. The book, again, flipped to the ask side. Basically, there is more people willing to sell Bitcoin than there are buyers. So something to keep in mind. You can see almost immediately, boop, we get over that kind of 100K level, and they really start at putting the ass up there, both on Binance and Coinbase. I mean, even on futures, you can see it pop up right here. Um, all right, yeah. So honestly, I just want to make that ETH video. Oh, what I didn't cover, how you can kind of position into it. So it's not all the time, but normally what I see happen is we will get the, let's go to 30-second chart here. We will kind of get the initial push down, which you could be a trade. You kind of get this mechanical bounce just off those liquidations like we were talking about. You could do a trade here. Honestly, I wouldn't. Um, you're seeing the relative volume kind of pick up, but you're not seeing a huge cascade really. And we're not running the stops. Remember, this is like the location of this was perfect. It really was. Let's mark that area out on our chart here so we can see it. Uh, so on these types of moves, you do want to enter, if you're going to be playing these kind of on the capitulation candle, they like to call it. Um, I think, let's see, is this CBD down here? Yes. All right. So anyways, how you could have played this? Basically, you normally get a high volume candle, you get one spike down, and then you revisit another low with a massive um, volume candle. And normally, what will happen, people will try to long the little bounce here, and they will get absolutely wrecked, and then we will bounce here. Um, let's see the CVD. Yeah, we you can see it. It goes kind of sideways, and then we nuke again. So what you get the first bounce, you'll get people getting long immediately, trying to catch this big up like we talk about. Again, that's not going to happen. They are going to get trapped in this high relative volume. They're going to get taken out. Again, second, you either have the third drives like this, 1, 2, 3. That's kind of a classic Bitcoin pattern, which we kind of saw. So you got the three drives, you have the high relative volume kind of ending crescendo candle, you have the massive, massive, massive liquidations. That's something I'm looking out for too. A high amount of liquidations, that's what you want to see, aggregated liquidations here, the indicator, boom, massive amount of liquidations. You have the aggregated tape trade count. Again, all this means it's kind of like volume, but it just counts the number of trades instead. So you have the three drives, you have the people getting long here and then getting immediately destroyed, and then you have the high liquidations here at the bottom. So anything you would want to see. Oh, also a great spot. Again, we talked about that swing failure pattern where you take out the lows of a big, big, big level and then you just immediately reverse. All those things was a reason I was looking to bid this. Again, you can't put much size into it because the market's so thin, but you can, even if you're undersized, even if you caught it 1, 2, 3 minutes after, it's still 7%. Levels I'm looking for immediately when we get this kind of puke down. Let's say you're getting here, boom. First level I'm looking for, and then the second level will probably be right here, right here. And then I'm normally out. We might go sideways. We ended up drifting higher, but that's just kind of the mechanical way that I would trade it. All right. So that's kind of the ways you can play ETH. I went over Bitcoin. I think that's everything. So when you see these signs, make sure you're paying attention to the market Everyone loves to be scared during these times. I think they are some of the best trading opportunities that you are going to get. All right, thanks, guys.